Even before the onset of coronavirus, booming e-commerce sales have come at the expense of in-store sales. And now the global pandemic is only accelerating this trend. Here now to discuss the dichotomy between brick and mortar stores and online shopping and how investors can gain exposure to this theme through an ETF is Simeon Hyman. He is global investment strategist at ProShares. Thanks for joining me today, Simeon.
Thanks for having me.
All right, so we know that Amazon is hiring a lot of new employees and many items are sold out. Essentially, a lot of people are, even more than they already were before coronavirus, going online and shopping, and with social distancing, not really going in stores. So retail brick and mortar is suffering quite a bit. So what do you make of what we're seeing right now?
So sometimes intuition is right. We are seeing, all of us are seeing the boxes pile up outside our houses. And of course, we take the stuff out and then we wipe them down with wipes before we take them in. But indeed, online retail this is just accelerating a trend that was well in place. And to look for some evidence of that, to make sure that sort of what we're seeing outside our houses is actually show up in markets. We have two indices at ProShares. We have an online retail index and we have a brick and mortar stores index. So, given the two behaving so differently, we wanted to track them distinctly. And it is indeed true, since the market peak in the beginning of this sell-off in mid-February, the online retail store index is down a little less than 20%. So everything's going down, but that happens to be less than the broad market and even less than the tech sector. The brick and mortar sector is down more than double that, more than 40%. So the markets are reacting according to the way we are behaving. Brick and mortar is really, truly suffering in this drawdown even more than the online stores, which have picked up a lot of business.
Right. I think the question now for many investors is, once coronavirus does eventually dissipate, are these new habits going to Amazon for every little thing going to stick? Or are we going, is e-commerce going to be able to keep up this clip with these new consumer habits that we're seeing?
So I think for sure post-pandemic, there'll be some return to brick and mortar stores. And I think actually one of the pieces where intuition doesn't work is folks are perhaps not appreciative of how early in this transition, again, pandemic period aside, how early in this transition we are. So just prior to the pandemic period, only about 15% or so of retail sales were actually transacted online. So there's a long runway here. I think this may have accelerated the trend a little bit, but we're still really early. Projections had the share of sales going online to maybe 20 or 25% over the next several years. Maybe that gets to 30 faster than we thought, but there's still a long runway for the online retailers to continue to take market share from brick and mortar. It's a process that will continue for quite some time.
And in terms of gaining exposure to this theme in ETF format, explain to us a little bit the thesis behind the Clicks ETF at ProShares, because we do know, speaking of Amazon, that stock has been holding up very well compared to the overall market, and it does have an outsized weighting in this ETF.
That's right. So I'll actually describe two of our ETFs. The first one I'll describe is the simple one to describe, which is ONLN, which is simply ProShares Online Retail ETF. So I mentioned those two indices. So our online retail ETF just follows the online retail index. Very simple, very straightforward to take advantage of the continued growth of online retailers. And look, it's not just Amazon. Of course, have Alibaba, but even niche players like Chewy have been making tremendous headway online. So that's the straightforward long online stores ETF. Clicks, which you mentioned, is actually a long short strategy. And Clicks is long 100 cents online retail, and it's short 50 cents of the dollar brick and mortar retail, so that you can take advantage of the outperformance of the online retailers, but also take advantage of that underperformance that we've seen, not just in the pandemic period, for a protracted period of time from brick and mortar retailers.
Yeah, and on the brick and mortar side, stores that are traditionally brick and mortar are trying, they're scrambling to catch up to Amazon, looking to do more online sales. Target, for example, is known for really being more aggressive with their online strategy. But when it comes to companies like Costco, what do you make of that in terms of traditional brick and mortar looking to go online more, and maybe that helping them improve their financials at this point?
So this goes to specifically how we put these indices together to make sure that we put the most robust way to capture these trends. So the online index is modified market cap weighted. I mean, we know that economies of scale are tremendously important. Amazon will continue to grow, and scale has a lot to do with it. But on the brick and mortar side, that index is actually equally weighted. And we equally weighted it particularly because of the questions you're asking. So across the legacy brick and mortar players, a few are going to get this right. A few are going to figure out some sort of omni-channel solution. But if you equally weight them, so what? Because the vast preponderance aren't going to get it right. By the way, I could make an argument that even the folks that get it right will probably underperform Amazon and Alibaba and Chewy, but that's the more subtle thing. I could convince you of that in 15, 20 minutes. But even if there are a couple who do get it right, when you equally weight that brick and mortar index and the short side of CLIX, there you have a lot more confidence that the vast preponderance will underperform and not figure it out, even if a couple of the names do. And even if in the corner case, there may be a couple that can thrive as virtually or predominantly still brick and mortar only.
Hmm. All right. Well, it's definitely a fascinating trend that we're seeing right now. And like you said, you only have to look outside your door to see this trend in reality, but we'll have to leave it there. Thanks so much, Simeon, for breaking this down for
Thanks
us.
so much for having me.